Welcome to the Dividend Talk podcast, episode 98, Starbucks versus McDonald's. Hey guys, welcome back to another episode of Dividend Talk. Today we're going to have a little battle between Starbucks and McDonald's to see who European DJ or Engineer My Freedom will choose. All that and more. See you on the inside. Hey European DJ. Better late than never, is that what they say?
Definitely, definitely. But I hope you're feeling well again because I know you were sick this weekend.
Yeah, I was sick on Friday, and a little bit into Saturday, and then my poor wife got it then after me. So, but we're all recovered now. It was only a 24-hour bug. I was telling you they're quite common here in Ireland because the changes in the weather between when you go from spring to summer and when you go from say autumn to winter, you get really hot days and then followed by cold days, followed by hot and cold, and it takes a while for your bodies to adjust to the different temperature ranges, and it's quite common to get sick over here. So, but no, all good now.
Well, you're living an island life, so yeah, it is a bit different, right, than what I'm used to. But good to have you back. It's maybe also good for listeners that lately we have been publishing also the podcast sometimes on Sunday evening or even Monday, and that has to do because we are both sick. Other time, from the other hand, life is restarting again, right? So we have a lot of family events currently in the weekends. So guys, bear with us. You can always count on the podcast. It might just not be always Saturday morning in case we have obligations for the family on the Friday evening, though it is our preferred evening, I would say.
Yeah.
But hey, let's get started. Is there anything that caught your attention in the news this week?
Of course, it's our good old friend Elon Musk, isn't it? I don't know if he's backing out of the deal with Twitter, but it all seems to be going tits up over there now at the moment.
Yeah, I saw also today the CEO of Twitter putting something on Twitter about spammers, and then Elon Musk only on his tweet only made this icon of shit there, and I think like they're in this deal, right, to buy the company, and he's just effectively calling out the CEO for posting shit. I mean, it is like you're watching kids on the square at school having a, I don't know, bitching over each other, right? It's almost shameful, please get adults, become adults, right? It's kind of a coming of age film that we're watching.
Like you could never imagine billionaires maybe 10, 20, 30 years ago airing all their dirty laundry in public like this. It's it's one of the downsides, I suppose, of social media. It shows these people maybe in their true light, and they're maybe not as, I don't know the right word to say, but maybe not as um, clever as we think they are. Maybe it's just bizarre. It's just really
So
bizarre.
maybe we should really long back for the old style UK aristocrats in their castles and with all the wealth.
Yeah, I mean they were arrogant, but at least they were arrogant behind closed doors.
Yeah, that's true. That's true. Well, the story continues. So, like, I don't own Twitter. It doesn't pay a dividend. I never even. Well, I cannot even imagine that it ever pays a dividend because the first for that needs to become a proper business. I like it as a tool, but it's not a cash flow machine. Having said that, by the way, my news for this week is about Germany. They want to go off the Russian gas and oil at all, right? And here I'm thinking again, like, there is something stupid in Germany going on. Remember this, what happened in Japan with the nuclear power plant and the meltdown there?
Yeah,
Like Germany said, okay, guys, we're going off nuclear power straight away, right? And I wonder if they even consider what the impact is of it. I mean, it sounds more ideological than wisdom. I do believe you need an ideology with climate change and such. But for me, this is like like what are they going to fix it now then before the winter, or are they going to with their power squeeze out all the countries around them so that they secure the gas and all the other countries are sitting in the cold?
Yeah,
Yeah, so for me, it's really a thin line between taking a role model in Europe as a leader versus just being plain stupid.
yeah. But if you're going to do it, now is the time to maybe when I say do it, but now is the time to show that kind of strength, as in it's coming into summer, so we don't need as much gas as what we will in the winter. And I believe they hope that this will all be gone by maybe at the end of the summer, and that they'll just quietly start buying it up again. That's what I honestly think. I do not believe for a second that if this was September, October, that they would be taking the same
Yeah.
stance.
Yeah, yeah, same here, same here. And then we have Hungary, of course, having difficulties with that. Yeah, this is really interesting, right? And also for American listeners, what's now happening in Europe with this shows how fragile Europe is and the NATO as well. It really shows it now because in the end, I think countries are just on their own. And then Poland feels this sentiment a lot, I must say. And I must also confess to that. So yeah, it will be really interesting to see how we are going to keep ourselves warm in the upcoming winter. It will be really interesting here over in continental Europe.
I mean, it's one of the flaws in Europe, isn't it? Like, it's a great idea in theory, but then when you put it into practice, you've got so many countries fighting for themselves, not fighting
Yeah,
for Europe, and then that's what makes it difficult. I suppose when
yeah,
you look at the United States, you've got so many states that are
yeah.
all. I mean, they do fight for themselves, but they're all doing it for the good of the United States. Whereas over here, Poland will want to do what Poland is best for Poland. Ireland will
Hmm.
want to do what's best for Ireland, which is
Yeah.
understandable. Which makes it a lot harder to be cohesive. So, I mean,
Yeah.
it does highlight some of the fundamental flaws, but there's been a lot of positives out of this as well. You have
Well,
seen,
definitely because I'm long oil.
yeah,
and then and Royal Dutch Shell is one of the biggest LNG producers in the world.
yeah,
So for me, I know I was paying gas today. It's never been so high, and I saw the bill. I felt like fuck, and I felt like, oh, but my portfolio, nice. So it's like, it's a kind of, if you own this stuff, you actually benefit more from it than it costs you, because I only go for tanking, like, what is it, once a month or something like that.
yeah.
So yeah, I was happy with this actually in the end.
Good, good. I mean, we have a lot of questions to get through towards the end of the show, so we might just skip on to the main part of the show, which we are going to talk about Starbucks, which we know you like, and I chose a company because I'm not a huge fan of Starbucks, so I chose McDonald's to talk about. So maybe you might talk a little bit about Starbucks and why you would like them.
So there are a few. I mean, some people that follow me really closely might get tired of me because I did 2 videos recently about Starbucks. I put it also a bit on Twitter. But look, I always loved the business of Starbucks. I'm already for 10 years when I'm traveling, especially, I always stop at Starbucks for the coffee. I'm one of those crazy folks that likes actually their coffee. I also like sometimes the snacks with it, but not a lot of them. I think what Starbucks doesn't get is that most of the snacks they use is nice for Americans, but I always feel totally stuffed eating even 1 or 2 bites from it. So their menu, I think, is not fit really for Europe from that point of view.
Yeah,
But I just like the brand. I just like walking in, the climate that it gives you. You buy your coffee and you move on the go, right? And so great business, but I always hated the stock. We've been talking about their balance sheet. We did a whole episode about how to read a balance sheet, and we use Starbucks as the example of a bad balance sheet, right? And nothing really changed there, I must say. Yeah, the equity is still negative. People always say, like people that are a fan of buybacks say, don't look at it, you shouldn't worry about it. I think it's kind of zeitgeist, right, that we think like that. But in the end, if you have more debt covering your assets than equity, it still makes no sense for me. Yeah.
yeah,
And bookkeepers can tell me whatever they want. It's just logic for me. But what I also So I like the business, but what I didn't like was the financial engineering. So what changed for me is when Howard Schultz came in. So Kevin Johnson, I think, was before. What's his name? He's retiring. So Howard Schultz, the former owner, stepped in, and he straight away stops the buybacks and focuses back on improving the stores, focusing on the baristas, yeah, and making also sure that they get better training, better salary hikes, so that they can at least try to mitigate the unionizing trend that's going on.
Yeah,
So for me, he gets it. Yeah, he understands where the core is, and it's not about buying back at a crazy level here, because it you need to innovate today for future cash flow, and that was happening too little. China in lockdown now. You have all these geopolitical issues as well. But they also expect China in the end to be bigger than the US when it comes to revenue. So I see that also still as an opportunity there. So for me, with Howard Schultz coming in, selecting a new CEO, focusing on quickly fixing some core issues in the business, made it for me attractive. And now the company went down all the way to $69. I bought my first initiating position there. It's still relatively small for how I like it to be. But yeah, at that price for me, the risk reward looks nice. Yeah, then you get it at 69. You get it probably around the PE of, what is it, 20, 21, right? So it's still premium. So it's not undervalued for me. It is then around fair value. I would like to really buy much more when it hits, for instance, the low 60s. So now it was more like an initiating buy to get used to it. But yeah, the brand, and I also see a lot of opportunity towards the future. I mean, it has now, what is it, 11 years of dividend, right? We will be talking about McDonald's with 47 years. I see no reason McDonald's can't get there. Yeah, they also want to invest a lot in, how you say it, in drive-throughs and such. I think there's still lots of opportunity there. And, they still have most of the day an empty store because they haven't fixed yet the food issue, for instance, which I think is a really big opportunity for them. And I think they have been trying to fix it themselves in the past, but I would rather do an in licensing deal. Yeah, they have all these real estate assets now here with franchisees. Why can't they acquire a small food store that has an excellent supply chain with a global presence and start embedding that in their store? So I still think they have like 20, 30 years ahead of them with the real estate that they have, and getting the stores more populated during the day. Last but not least, I think also the digital presence is excellent. They're an innovator there. So yeah, from a business, there's a lot to like. And at these prices, I find this share price reasonably priced. So that's my take on Starbucks, EMF.
okay, good. I still don't think it's enough to convince me, to be honest. I don't like their coffee, which I've mentioned. I know you sit in their stores, and maybe that's turning me off them. But I just don't see the growth prospects with them. But you do make an excellent point there, regards why don't they go and get a smaller chain with an excellent supply chain and bring food in. I think that would be massive if they could do something like that. I'm not sure if that's something that they will do, but it is certainly a space they should maybe go into a little bit, because you're never going to go in there for something to eat. Let's face it. It's probably just a quick coffee on the go. I don't even know if many people sit inside in Starbucks. Certainly over here.
It depends on the location. I
Yeah.
spend a lot of time there. It's excellent for business meetings. Yeah,
Okay.
if you want to have a 1 hour meeting, you can, and you don't need necessarily food. You meet at Starbucks. Yeah, it's this whole
Okay.
climate of that, which I think is not well known, but I think in the entrepreneurial space, it's quite huge.
Okay. Interesting. Well, I don't think I would go to Starbucks for a meeting, but it over here it doesn't happen in Warford so much, but we're not a huge county in Ireland. Maybe if you go to Dublin, it might be a little bit more. Our capital city, it might be a little bit more prevalent. It may happen a little bit more, but I'd say it
Snobbish.
happens. I wouldn't say it's snobbish, but you got to think of population and the people who work there. And Dublin is a lot more diverse people working there than Waterford. We would have more industrial and factories where you would not be expected to go out and have meetings in coffee shops, whereas Dublin obviously is huge. It's our capital city, has so many more opportunities, and I'm sure there's a lot more these meetings taking place.
Probably in Watford, it's like they just want a black coffee in a plastic cup for €1.
Yes, and we sell that in
Yeah,
Lidl or Lidl, whatever way you want to pronounce it, and it's awesome.
yeah, nice, nice, nice. No, but I think it is something more for how is it for the metropoles
Mm.
Starbucks. It's clearly one that you find in all the shopping malls and such because it has a kind of a premium brand
Yeah,
around it, and I think this brand is really powerful. It is for me kind of like the Coca-Cola of coffee, as an example.
yeah. And like you talk about brands, and I think that moves you onto McDonald's quite good, because is there a more iconic brand in the world than McDonald's at the moment? And there's probably not. Everybody, everybody in every country will heard of McDonald's, and there's probably at least one or two in the area close by to you. You did when you were talking about Starbucks, there's a lot of similarities between the two companies, and I'll talk about the balance sheet first, because they don't really have the best balance sheet out there. If you're to look at equity, they have negative equity as well, which is similar to Starbucks. And the reason for that, which will be of no surprise, is that they have a high amount of property that they have to pay, which obviously goes on as an asset, but then on the flip side of that, they have to pay for that, which they are paying with in long-term debt. So it kind of balances each other out, and they it gives them at the moment negative equity. Other than that, on the balance sheet, there's not a whole lot else that stands out other than long-term leases, which again link to the property that they have. So that's the one thing that sticks out for me on that balance sheet. It's not the healthiest balance sheet, but it's not the worst. I mean, it's pretty much zero. If you were to sell all that property, it would probably clear just about the long-term debt. So for me, it's nothing to worry about right now, because we know that down the line, if property goes up, in which it does in lots of places, that might be more beneficial to them on the balance sheet. That was one of the similarities that I saw when you were talking. But as a company, I ran them through our screener, which we know we look at. We went through, I think it was, I can't remember what show, about 5 or 6 shows ago, where we look at different metrics. And the one thing I found interesting was that their revenue has been declining over the last 10 years, steadily declining. And this is because they are closing down lots of their stores, maybe they're non-performing stores, and we know we have this global health crisis now, where people are becoming a little bit more conscious of what they're eating, and that's not good for companies like McDonald's, who obviously sell fast food. They do try and combat that. They do have healthier options. To be fair, they are very transparent in what they offer, and they give you all the breakdown of all the nutritional facts as well. And they
Yeah, but
do.
as a vegan here, it
Uh,
sucks. I mean, I must almost puke after a vegan burger from McDonald's, to be honest. Sorry.
yeah, but look, there's vegans is one of these trends that are growing, but that'll phase out eventually. I'm, I'm joking. But they do have those. I mean, those going against it. But on the flip side, they are transforming their business. So what they are doing quite cleverly is that they are transforming more into the franchise business. So what that means is that they don't have to spend as much money doing up the restaurants and opening up new restaurants. People will do that for them. They will pay McDonald's to open up a McDonald's, which reduces capex, brings in rent. Also, more interestingly, is if you look at their margins, such as their gross and net margin, they have been increasing quite a bit over the last 10 years. So we have an interesting thing where we have revenue declining, but we got gross profit margins going up, which results in higher net income, which results in higher earnings per share, which is quite good. I think it's been managed quite well from that front.
Oh, a
Um,
55% margin, right? We're
yeah,
talking here about.
yeah,
That's it's unheard of. I mean, Visa has 80 or something, right?
yeah,
But 55, it's like a cloud business when you think about it.
it's amazing. And if you go back 10 years, it was under. I think it was close enough to 30. So we are gone up nearly 10, 20%, nearly 30% over the last 5, 6 years, which shows management is really clever. I mean, they focus on getting new customers and retaining old customers, but there's only so much you can open new restaurants if you're going to close. I mean, I find, especially with my kids, I see McDonald's aimed at families more so. Okay, eventually kids grow out of that, and then families grow up, and then you're continually getting new families in, but they move on. I just look at my own kids; they are gone out of the phase of Happy Meals. They don't like McDonald's. They prefer. We have an Irish chain over here, which you will never have heard of, called Supermax, which we prefer because it's the chips are nicer, the burgers are nicer. But I just see that when they were young, they all love McDonald's. They see it on the TV, they get the free tie, but then they grow up and they move on. And that's probably what happens all over the world. It's good for when you go away on holidays with a group of lads, you might go to McDonald's. But other than that, I would never have the need to go to a McDonald's now. Because my
Yeah.
family has grown out of it. So it's tough for them to regain, I would think, lost customers until they get a younger family of their own. Um,
What do you think about Russia, the Russian thing that they announced that they will sell their 800 stores to a Russian company?
I mean, the question is why now? We know back at the start of the war, we had lots of companies doing this, lots of them for maybe publicity or and so on. McDonald's have seemed to have held on till the very last minute to do it. It's obviously going to impact our international exposure. Like we said, the revenues have been declining. We know a lot of that has come from the international segment. So again, this is another blow for them. I'm not sure. Look, a lot of companies are pulling out of Russia. I don't know if it's the right thing or wrong thing to do. We do know that the war is not right, but I don't know how the Russian people feel about it. And the only people being punished here are the people who are not in the war. So I don't know. I just all I know for me is that it will definitely impact McDonald's top line
Mhm.
revenue is going to decline. I don't know by how much. I don't know offhand how much Russia contributes to that, but I'm
Yeah.
sure there'll be a knock-on effect to that. And I know that Russia have come out and they're not going to make it easy for these companies to leave either. So maybe the assets that they leave behind, they might have to write off.
Okay, so then the million-dollar question now is like, if you had to choose with a gun on your head, one of the two companies, which would you choose right now at the current prices?
See, the question there is at current prices. And I didn't speak about that yet. So on
That's right.
valuation, I still think McDonald's is overvalued. I really think
Hmm.
it's overvalued. Actually, I have them about 61% overvalued because my growth rates are fairly conservative. I currently rate them at about 91 to maybe €100, and they are currently trading at 224. So based on current prices, I would not be buying McDonald's. However, they do have, I mean, you look at their free cash flow growth, it's 13%, which is amazing. Earnings per share growth is nearly 12%. Their payout ratios are both under 60%, and they've got a 47-year history of dividend increases. That's multiple recessions. They've got a 5-year dividend growth rate of 8.86. I would, based on the metrics alone, I would prefer to own McDonald's over Starbucks. Based on valuation, I would prefer to own none of them.
Okay, fair enough. Fair enough. Well, my humble opinion about McDonald's is it is a great business. I don't see McDonald's going anywhere. I mean,
I just think it's
okay,
grossly overvalued.
yeah, it's way way overvalued. Even if you look at it as a real estate business, I still think it's really overvalued.
And that
I think people will keep liking fast food and things that are bad for them. So whether it's kebab or something like that, I don't. I really think that McDonald's is there to stay.
Yeah, and I didn't touch on the real estate part of it a whole lot either, and that's a whole nother area. And actually, it's more of a debate now: is McDonald's going to be considered as a real estate company, or is it going to be a fast food company? And it looks like they're going to transition into maybe real estate. But then, if they're going to franchise out all or like companies, maybe they might change their mind again. So
Yeah.
it's hard to know, but they are certainly. I think it's a really really good company. It just I could not pay the current price for them at the moment.
Super. Good. Thank you. So this was it from us about McDonald's versus Starbucks. It's never as black white as you can hear. There's a lot of story around those companies, around the stock, but I hope that you found it interesting to hear our thoughts about this. EMF is clearly on the fence for both of these stocks. I'm really continuing to look at Starbucks at these prices. And yeah, that's it to sum it up like that in a nutshell. So, having said that, let's go to our typical topic right now, the listeners' questions. We have to go a little bit on a rapid pace through it to still keep it under the hour, this show. So, the first question is from Ron Kingpin, and I love his last name. And he's asking, what are you buying and what are you selling right now?
So buying wise, it's core stocks, Johnson Johnson, Texas Instruments, Microsoft, those types of companies. What am I selling? Nothing at the minute, but if I was to sell anything, it would be more along the lines of maybe Rio Tinto and someone like Walgreens or something like that. So the more riskier stocks in my portfolio. But at the moment, I'm not selling anything, and I am going to focus purely on quality.
Yeah. So I'm not selling either anything. I can tell you what I did buy during the correction. That was Viatris. I
Hmm.
bought some more. I initiated position in Starbucks. And the third one, actually, I already forgot. So um, must have made a deep impression on me. But I'm still looking a little bit at Castellum at these prices at the 180 crowns because I continue to find that an interesting real estate company in Europe. So that definitely has my attention.
Okay. Marek has asked us, there's a tax optimized account which should be available in Europe now. In Poland, it is still postponed. I'd like to know if it's working in any other European country. I briefly heard about this in one of the fire groups that I'm in. So I do know that it is due to be implemented in Ireland. I'm just not quite sure if it is yet. And I'm not sure with the rest of the European countries, but it certainly looks encouraging. But I don't know a whole lot of the detail behind it.
Yeah. So, by the way, to get back to the former question, I also bought some T Rowe Price
Okay.
around $116. In Poland, we have such a thing, right? So we are contributing, at least my wife is contributing the max amount of what they call, you have IKE and IKZE. And I
Mm,
believe we are having IKZE that she's maximizing. And it's a tax-free investment account where the money is available to you when I believe you turn 65 or 67, or maybe even when at 60.
yeah.
So she's maxing that out. So we have already something like that in Poland. So I'm not surprised if Poland is on the fence right now because it's already a pretty good deal, I would say. The only issue is that it's only available via a few banks. And I must say it's not the hero or something like that where I prefer it to be. I do, by the way, know that in the Netherlands, I think they have also something like that now that you can save for your retirement. But I'm too far away from the Netherlands to really follow the news around that. So probably one of our Dutch listeners can explain a little bit more about what we currently have there.
Okay. And
Okay. Yeah.
Mark has followed up with a second question, and he said he has started investing too late. I disagree, but and he doesn't expect to reach fire. Low yield stocks shine after 20 years. Do you still think it is a good idea to buy low yield stocks like Microsoft or Apple, or should I buy those having at least 3% yield?
Um, so you know what they say, right? We get old too soon and wise too late.
Mm,
But Marek, what I can tell you, you need to calculate your own plan. I've got a calculator on my blog, and I can tell you what I use. I use 3.25% as an average starting yield for investing. It doesn't mean that every stock needs to be 3.25%. I prefer it around 2.75% as a minimum. That's usually where my screener is. I made the other day an exception to buy one share of ASML, which has clearly not met that threshold. Um, But on the other end, for instance, let's say like that, I bought Starbucks at 2.8. I bought T Rowe Price Group the other day, and Viatris at about 4%. So on average, it's probably like 3.4, 3.5% what I bought. So it's clearly above the 3%. And I also calculated a dividend growth rate of around 6%. It's important to know that I didn't met that the last 2 years. I had something like 4 or 5% growth rate. So that's what I calculate with to reach my plans. And Marek, I think you need to do something similar. Calculate the plan, calculate what you need, let's say in 10, 15 years from now, see what the numbers are. And there's only one thing that I would like to warn you then from is falling in love with the yields, because you start by definition to exclude some really high quality stocks. That's okay, but know that your portfolio might need sometimes some more strength in there, and then it's good to sacrifice some of the high yields to combine it with a low yield. And some people actually buy, let's say, tobacco stock at 8% and then combine it with the purchase of a Microsoft. I believe you did as well one time, right?
Yeah,
EMF.
yeah,
And you still get a decent average yield and future growth potential.
yeah. And some of these lower yield companies, like you mentioned too, like Microsoft and Apple, if you were to just look at the capital appreciation on both of those companies, depending on when you buy them, it would more than make up for the last yield. So I would not discount low yield stocks by any means, but I agree with European DJI. You need to come up with your own plan and maybe stick to it. 15 years is a long time. You might not reach exactly what you want, but you could be pretty close and live a comfortable lifestyle. So stick with it,
Yeah.
I would say. And as European DJI said, come up with a plan and stick with it.
I think a 3-day working week when you're 60 is just as beautiful.
Exactly. Exactly.
Good. The next question is from Gianluca, and he is saying that since a few months he is having trouble to save money for investing. It's holiday time, COVID restrictions are mostly gone. So, he's spending his money now on nice things outside of investing. So he's asking if we have ever had similar times.
Yeah, of course. I mean, l- life is for living, and if you were to read, if you were to believe everything you read on social media and blogs, you think everybody all the time just invests and don't live a life. I mean, I think it's quite clear since we've opened back up for COVID. I've missed a couple of these shows because I travel quite a bit, and I plan on continuing to that because I love traveling. I love going away. I love spending time with my family and stuff like that. So I would not feel guilty about that. And if it's something that you do quite regular, I would say maybe try and build it into your plan or into what you do. Um, I I do that. So when I budget my money or when I have my money for my bills. I have my money that we use for we just call it everyday expenses, but we use it for holidays or when we want to treat ourselves. And then I have extra money on top of that, which I invest. So yeah, I mean, I wouldn't feel guilty about it. You have to live your life. It's a trade-off. Do you live the life now or do you live it in 10 years time? So I wouldn't feel too guilty, but if if you never investing, you're never going to enjoy those gains in the future either.
Super. Hey, the next question is from Simon Stott, and he is saying like the sky is falling for a lot of these stonks, so growth stocks, let's say, and there are a few good-looking knives to catch. But how does one play those that simply refuse to budge? For instance, Hershey with ticker HSI, or Costco with ticker symbol Cost, because they continue to really hold up when it comes from a price point of view. So, what are your thoughts there?
I mean, that's a sign of a really top quality company, isn't it? The ones that refuse to budge or don't go with the market. And sometimes they're ahead of the market. They might even take off before the rest of the market does as well. So for me, again, you have to remember that this is a long term game or world that we are in, and people get caught in thinking in weeks and not years. And if you believe that they are a good value right now in 10 years' time, then they're worth buying. You don't have to, I don't know, put all your money into it. You can maybe keep some aside in case they drop. But I mean, just think long term. That's how I would look at it. And that's
Super.
that's easier said than done because I struggle with that too. Just so as you know.
Yeah, and I think we have also seen a rotation, right, where
Yeah,
cash went out of growth stocks and into value stocks. So
yeah,
it's all over the board, unfortunately. Yeah. It never seems to be a good time to be a dividend growth investor. We are always swimming against the current, right? It doesn't make it easy, but it pays off.
exactly.
Okay, then a question from our Facebook friend Anders Storgaard, and he is asking about the topic of pick and shovel plays, and he explains it. So, and it's probably good for the listeners. During the gold rush, the guys selling picks and shovels were the ones making a fortune, when the gold digger usually wasn't making any money. So he is thinking, for instance, to use this analogy, at a company like Corning, ticker symbol GLW, as such a company like a pick and shovel, because it's a glass manufacturing who makes all the displays for smartphones and such. As example, Apple. They have currently a dividend yield of around 3% and a compounded annual growth rate of around 12%. So currently the company is trading at a 15 PE, and it's an example of what he finds such a pick and shovel, right? So
Yeah.
he's asking us, what do we think about the theme of pick and shovels and our thoughts about it, and maybe one or two.
You know who this reminds me of is the kind of capitalist who always, I think, describes his choices in this way, where he looks at, and we look at ASML as an example. We know the chip industry relies on a company like this, and we were talking about Intel and Nvidia and so on, and he was always talking about ASML because these are the companies that the likes of Intel are going to need to use. And I think ASML is a perfect example of a pick and shovel pay, and I think it's a really good strategy. And maybe another one that we wouldn't have thought about is we have this energy bubble at the moment. We know there's a rotation into energy, but if you look at LNG, for example, that took a rather pretty good beating since 2018. But you need to transport that around. And we know now that this war in, say, Russia is going to affect LNG coming from Russia. So we're going to get it from other places, maybe Australia and so on. And this has to be transported. How is it going to be transported? With huge cargo and tankers and so on. And there's plenty of companies out there, and I can't think there's one on the top of my head just delivers LNG across the world. So regardless of whether the price goes up or down, it still has to be shipped, and that company is still going to make money from the shipping of that.
Yeah, super. And for me, an example is Digital Realty Trust. They built all these cloud data centers that Google, Facebook, and Amazon are using and renting. So for me, that's also one. If you want to play on the cloud, yeah, consider that one. I think it comes with a 3.8% yield or something like that right now. Their growth could be stronger, let's say like that, but it's also for me like a pick and shovel that people don't necessarily straight away think about when you think about the cloud. Good. And the next question is from Daniel Hoffman from Facebook, and he's asking whether we pay attention to insider transactions of the companies that we follow or consider to invest in.
I look at it. To be fair, I do look at it. I think it's interesting. You typically don't want, especially after a company has gone up a lot in price, you don't want to see a lot of insider selling because you they might know something more. They might think the value has been reached, but it's it's not something that I use in any of my calculations whether to buy. It's just something I generally look at.
So I burnt myself one time on this. General Electric again, my famous old story. It was always trading between 20 and 30, let's say, dollars pre-split. Suddenly it dropped below 20, went to 16. And I believe it was the CEO, John Flannery, that came after Jeff Immelt. And he started buying, and half of the management team started buying. For like, oh, they must know something. So I bought against something. Next quarter, zoom to 11 or 12 dollars. So I thought, like, okay, there you go. At least I'm not the only one feeling the pain. So I don't look at it anymore. Although it's funny that I bought last week. Starbucks is 69, and then someone pinged me saying like, "Yo, also Howard Schultz bought I don't know $1 million Starbucks shares at 72."
Yeah.
So, But I felt like he's probably been following me at Twitter because I tagged him the other day.
I think insider selling is more relevant than insider buying, because if you're on the board of a company and you really believe in what you're doing, you could have maybe blind judgment in thinking, okay, I'm definitely going to help and drive the
And I
value of
want to
this
give a
company up.
signal. Yeah.
Exactly. So it could be just blind faith, or you could be just buying all those shares, hoping that it will make this juggernaut and drive the price up. Whereas when you sell, you're probably selling when the price reaches a top, and you're kind of thinking, okay, what has this company left to give? Maybe there's no more value, and then you're selling it. So I think that's more telling for me than insider buying, to be
Yeah,
honest.
or a cash out to a one-off cash out to at least secure a nice life going forward,
Yeah,
right?
yeah.
Okay. Hey, then the next question is we got it also via Facebook, and he's asking 20% of the assets are typically in cash in a war chest, but the person spent his war chest, right? So far, no war chest left. So he's asking, he wants to consider, how is it, reestablishing this war chest. So he asks us to look at his portfolio to see if there's one of his holdings that we will consider selling to raise cash. I shared the picture with you, but maybe also for the readers, there are quite some interesting companies on there. For instance, Royal Dutch Shell, OCI, Rio Tinto, Munich Re, Alibaba, SSE, Danone, Flow Traders, AMD, Novo Nordisk, Sanofi, Brookfield Field Asset Management, and Unilever. Is there anything in here that you would say, like, okay, if you really had to make a choice, you would sell this?
Man, honestly, I don't think I could recommend anyone to sell anything in their portfolio. The one thing that concerns me is that he's worried that if we face a further market correction, he'll run into some short-term liquidity problems. And I think we said this before, you should only be investing in what you can afford to lose. And if you're going to run into liquidity problems, maybe you've overextended yourself. That's something I would definitely look at going forward. In terms of selling companies, looking at these, I like pretty much all of them. I wouldn't recommend selling anything.
Yeah, same here. I would just accumulate cash going forward. And the only thing I could consider is more like, remember what you are. If you're a dividend growth investor and you want to have 100% in dividend growth stocks, you might want to look at the stocks that are not a dividend growth stock, like Alibaba as an example. You would then need to take a loss. He has some loss on Alibaba, but I've got twice the loss he has. So, and I'm not selling Alibaba because I still think it's heavily undervalued. Yeah. So, and from opportunity cost of point of view, I don't see a better opportunity there. So, what I mean with this, I would say, think about what kind of investor you are. If you want to clean up your portfolio, match everything with your plan. If something doesn't match that plan, you could consider selling it. Otherwise, stick to it. Why sell it, right? I
Mm,
think they always say your portfolio is like a bar of soap. Yeah, you shouldn't touch it if you want to have something left in the end of the day.
yeah, and I would say don't get too, how would you say, bogged down on having a war chest. If you don't have money to invest when the market crashes or whatever, don't worry about it. Just invest what you can afford when you can afford it. The market will go up, it'll go down, it'll happen. It's happening now, it'll happen probably in another 10, 15 years time. It's going to happen all the time. So I wouldn't just be selling just to build up a war chest to reinvest, because
Yeah.
chances are you want to get it when it's the bottom, but probably going to miss that, and you're probably going to pay more than what you sell it for.
And there's so much research showing that you can better be without cash and fully invested continuously and using every time your savings to invest again. Of course, beyond your how is it emergency fund, right?
Yeah.
There's so much research about this that if you would have missed like the best 9 days or something like that, you would have missed like 20-30% of the wealth of your portfolio. So I'm often having a war chest because I get a bonus at work or something like that, and I don't want to spend it at once. That's why usually there I build up a small war chest, but
Yeah.
it's not effective from a capital allocation point of view.
Yeah, my wife spent my war chest on a
There you
new
go.
new attic conversion, so you're not
Yeah,
alone.
yeah, exactly. Hey, the next question is from Nighthawk, and he is asking about the size of our portfolio.
Yeah, it's in around 29, 30 companies now, I think I have.
Yeah, for
Um,
me it's like 40 something.
yeah. So I know he's been struggling with this, and Thiago wrote an excellent article about concentration versus diversification. It's a hard one because there's lots of companies that I like as well that you want to buy, and I've struggled with that. I think I nailed down 32 at the beginning, but now I'm easing up on that, and if I go over that, I go over that. I just want to focus on quality companies. The only thing that kills me is that time. You need a lot of time. The more companies you have, and if you if you have lots and lots of companies like they say Dividend, Hummingbird, you don't worry about that anymore. But if you have a portfolio maybe of 40 companies and you want to read all their annual reports and keep up to date, that takes a lot of time.
Yeah. Yeah, and concentration from me also suggests that you really know what you're doing. And I still feel like we have an information issue. We are not analysts. We are not sitting in the.
Mm,
We are not meeting with the CEO of the board of directors to get first-hand information. So I feel much more comfortable with 40, and I explained on my blog. It is I take it inverted. I ask myself, how much am I willing to lose? And I told myself, well, if my dividend growth rate per year is 6%, let's say expected, then my portfolio should never have a position more than 6% individually contributing to the dividends, let's say. Because that makes, if one company goes totally in a dividend cut to zero, I still
yeah,
have the rest compensating for it so that I protect my income.
yeah,
I do have one or two, maybe three, four positions that are larger than 6% because I'm in the accumulation phase, but that's what I'm targeting towards too. And that's why I came to a portfolio of around 40 stocks, ideally for myself.
yeah.
But that was my thought I put into it in such a way.
Cool. And Martin kind of follows up similar to that. And how are your war chests faring out during this downturn? When, if ever, do you expect to be fully invested?
I'm trying to get more and more to fully invested. So I just got my bonus again in April. So I have upped my how I said my monthly contribution now. So I hope in 7-8 months from now it will be all invested, and then I should be almost fully in cash again, except for my emergency fund.
Okay, cool. Dividend.exe has asked your thoughts on ticker symbol SNA or a company called Snap-on.
I honestly I have no clue what Snap-on is. Maybe I'm in this kind of circle that is probably not missing something. But when I see Snap-on, we were making a joke already. It sounds like strap-on. That's the only thing I can think about. And
Yeah,
then yeah, I don't know how a strap-on you can snap on.
I mean, I don't know a lot about the company, and we talked offline about it. Just a quick Google, it is a manufacturer and maker of high-end tools and equipment for professional use in lots of
Yeah,
different
that I
industries.
can imagine. There's a special strap-ons. High-end tools. Yeah, that's a funny one.
No, sorry, Dividend. Actually, we don't know a whole lot about the company.
Oh boy, I never knew that we would be talking about strap-ons on dividend, but dividend or everything is possible here. You can hear that.
We got a question from Fali Daza asking us how we manage our time with everything going on. Very poorly at the moment, considering we are recording on a Monday evening. It's hard, particularly after COVID with things opening up. It's hard, but passion wins out in the end.
Yeah, it's same here, and I have relaxed a little bit lately in the sense of the publishing schedule. It has been a bit more quiet on the interval on my blog and also on YouTube because in May, I had so many family events that popped up after COVID. Also, the garden needs a lot of maintenance. So it is family first, right?
Yeah.
Before this, um, it is just now a little bit difficult with the spring for me. I've got a lot of work on hand. I will also go on vacation in June, so the first 2 weeks of June I will also be out. So yeah, the content suffers then from it. How you say it? But generally, it's what you say. It's passion, but what is even more important is routine. Our wives and kids know that on Friday evening it's dividend talk evening, right?
Yeah.
Sunday morning for me is video creation time, and then during the week, 1 or 2 evenings blogging. So that's my regular schedule, and that's set in stone. And my family, my wife is fully supportive there. She knows it's my passion. She, after 15 or 20 years of marriage, you get into this situation that you actually appreciate each other if the other one is really a hobby or a passion and not just walking bored around, right? But they also know when to show up. So, for instance, my Saturday is holy. Yeah, I
Yeah.
spend a lot of time with the kids and everything, being really present at home. I bring my kids to school and such. So it is. I'm really focused on where I invest my time, and the rest, what is not important for me, I just ignore. So I'm uber focused on that, I would say.
Cool. Um, OMS has asked you for your thoughts on Continental AG. I don't have a ticker symbol.
Yeah, so I remember looking at it once really long ago. And with these companies that produce tires, I believe there's also Goodyear tire and rubber.
Mhm.
They have issues with a pandemic, as an example, and suddenly no cars are driving, right? So Continental AG also cut their dividend 2020. So OMS, that's just the reason why I'm not even looking further into it, because it's for me not attractive. I need to protect my income when I'm at retirement, and if companies cut their dividend in 2020, although it was severe, it just shows that they have a weakness in their business model, that it cannot stand such pressure. So it's for me not interesting. Then he's also asking whether it's a dead cat bounce on Friday. That was the exact thought that I had. Like, oh, this feels like a dead cat bounce. Yeah. So I didn't check. It's now Monday evening. I didn't check what the stock market did today, if it's up or down. So I don't know. But I do believe that, and this is more macroeconomic. And here I'm on thin ice because I'm not an economist. I usually try to withhold from it. But if I just see everyone around me complaining about the cost going up, and there's only one action that we are talking about in those conversations, is where can you save? So I believe as consumers we will all start to spend less on certain items, and I think that might hit the real economy at a certain moment in time, and we might see a contraction there. This is kind of my speculation here, that I think there's still more to come from an economic point of view, but I don't know what the stock market does. Sometimes these are totally disconnected in my feeling.
Yeah. I mean, if we say the stock market's going to crash, it's probably going to go up another
Gone up,
20 or
yeah,
30%. So,
yeah.
yeah. Okay. Fire Zone has asked us where are we buying our US stocks via US exchange or Germany. GetX has a flat fee of 125.
hmm I always buy at the local stock exchange. That's my kind of rule. I don't know even why, but I guess it has to do with liquidity in general. But I just feel better when I buy stocks locally. And I know sometimes it impacts with dividend tax, but I always buy locally. So all the US stocks I buy directly on the US stock exchange.
Okay. Cool. It's the same with UK stocks as well. Say like British American Tobacco. Would you buy them on the London exchange?
Yeah, yeah. So I've got the currency risk with that as well. But you have to cut the currency risk anyway. Also, if you buy the euro one.
Yeah. I don't know why I have the US one, BTI.
I don't know either.
Yeah, I don't know. I don't know. When I was buying it, I don't know what made that decision, but at the time, I just bought the US one, and that's what I have.
I like to get some dividends in pennies. Yeah, so penny wise, pound foolish.
Anyway, I'm foolish. Yeah.
Yeah. Okay, so then we have the last stock and last questions from John Ryan. He's asking European or USD stocks at the moment, and I think this has to do with the almost dollar euro parity that we have seen lately.
Yeah, I mean, we just focus on good companies, whether they're European or American. I don't know.
But does it matter to you that, and I think Martijn Hoek also asked me on Twitter, so let's combine that question straight away. You know, you were first buying stocks, American stocks at the euro, let's say dollar currency of 113 to 120, and suddenly at 13 to 15. That's a 10% difference, right? For stocks that are now 10% cheaper.
Yeah, I mean, we've been getting this question from day one, I think, of the podcast, this currency risk, and I think I said at the beginning that it swings and roundabouts. There's going to be some points when it benefits me more buying companies, or sometimes it's going to benefit me more in terms of dividends received. So I don't pay a whole lot of attention to it. Maybe I should, but I don't. I really don't.
Same here, dollar cost averaging. You know where this currency comes in from? It's because we're looking at the currency. We see it in the transaction in our account when we buy dollars, right? We see that we
Yeah.
get less. But another one that always creeps into my mind are the stupid analysts that are then starting to talk about the currency and a strengthening dollar. And it gets into your head. And that's when you start looking at it and you think, but I'm like you, dollar cost averaging. I don't know where it's going to, right? Maybe
Mm,
it goes to 85 cents, and then we think like, oh, it was good that I bought at 1.5, right? You don't know where it's going to.
exactly. Yeah. Yeah. We don't know. Okay. Awesome. That's the last question then. So thanks a million. We had a lot of questions. I don't think we got through quite as quick as we thought. So apologies for that,
Are
and
you
thanks a
telling that I'm
million.
speaking too long and with too many words?
Maybe I didn't want. I wanted to be a little bit more polite about it, but
But our listeners deserve respect and proper answers. So sorry for that.
but again, thanks a million for all the questions. Thanks for listening. If you stuck by this long, we did try to do two companies a little bit rushed because of the amount of questions that we have. So we'll try and focus it a little bit more for the next one. But I think it's a good idea. So thanks a million for the suggestions as well. So hopefully we will see you all next week.